Hello again, I'm very glad to see you today. For today, we are going further into the risk management activity, which involves recognizing and selecting from the risk mitigation strategy which we can select in order to control the risk that we identified earlier. And we also need to do certain analysis, either quantitative and qualitative analysis, in order to justify what we want to do to control those risks. So for this chapter, we are going to look at factors that we need to actually weigh in before we actually select certain control by performing proper analysis. One of the risk control activities is for an organization to try to select which is the most suitable approach to control the risk for its information asset. Among others, it needs to select either avoidance, transference, mitigation, or acceptance with regard to control the risk. In avoidance, the organization needs to discuss with the team either to apply certain safeguard, such as, for example, you want to protect your database, so perhaps you can install certain IDS or firewall to protect the information asset from intrusion or theft. Secondly, for transference, perhaps you can shift the risk to other parties, such as perhaps you can buy certain insurance to protect the building from fire in case it happens, so that if, let's say, the risk happens, you can have certain monetary backup in order to have those assets to be restored to its natural state, or perhaps in terms of monetary refinement. Third, in terms of mitigation, you perhaps try to reduce the risk if it exploits certain vulnerability to the information asset. For example, you have installed backup location for your organization to perhaps operate if certain things happen to your information asset, or perhaps you can install proper storage backup for your asset. Lastly is acceptance. This is where your organization try to understand the consequences and try to accept the risk without any control. But this acceptance is usually after you have considered the avoidance, transference, and mitigation. These are the risk factors that you can accept. If it happens, it happens. Before you can arrive to the fourth conclusion to accept risk, you must first and foremost consider the first three mechanisms, which is avoidance, transference, and mitigation approach to protect your risk. Okay, so basically, if after you consider those three mechanisms can actually safeguard your asset, or it's worth doing those three mechanisms in the first place, then only can you arrive to the fourth conclusion, which is the acceptance of risk. This fourth arrival of a decision is where you consider the residual risk. Means that residual risk is where, after considering the impact of the loss of the loss of the asset is the one that is not very impactful, or the loss is not such an impact to the organization. For example, perhaps it's the loss of just your stock of old papers, or perhaps is a loss of certain assets such as chairs or table or perhaps monitor, then those loss can be absorbed. Okay, remember previously in our TIVA worksheet, you have also have those information of the asset that you can actually consider as highly variable up until or down until the least variable for your organization. This is why it's very important for you to list out all the assets that you want to protect or worth protecting. Then after those list of assets with the threat and also the vulnerability, you can see properly in terms of risk that can come to that asset, and which assets are actually worth protecting, and which control mechanism can you actually do to protect those assets. So, in order to select the proper risk control strategies to protect your asset, you must have a proper overview of your asset. Remember from our previous exercise, you consider your asset that you want to protect, you give certain priorities, and then also you consider the threat. vulnerabilities, and the risks that could actually fall into your asset. Then only if you have that proper information can you arrive to the decision of which control strategies that you can select. Remember, the most important thing to consider is if the loss is actually have certain impact to your organization. Does the attacker actually gain more from what you have lost, or they just gain less from your losses? These are the considerations that you must actually discuss with your team before selecting the proper risk control strategies. To help you in arriving to that decision, you can use the following flowchart. Basically, this flowchart just repeat what I've said earlier, which is you need to have a proper evaluation of your asset, and after that, considering whether those risks that could come to your asset is perhaps impactful or not to the organization or to the asset that you want to protect. So the first flow in this chart is what we have done during our last chapter, which is we have properly identified the threat source, the asset that we want to protect, and also we need to identify whether those threat and vulnerability that exist is perhaps will cause certain loss to the information asset. These are the risks that we have identified. The first flow of this consideration in risk management. Okay, and after that, we need to consider whether those risks that could happen is actually causing certain losses or have certain impact to our organization. So the question perhaps we can ask is attacker's gain greater than cost of attack? Means that if attacker actually do those attack, will it actually cost them more or it costs less from the gain that they have from acquiring those assets from the attack? Okay, if the answer is no, then the risk can be accepted. If the answer is yes, you consider the next question. Okay, this one is the loss to your side. If the attack is successful, is the expected loss greater than the organization's ability to absorb? Means that we consider if that asset is compromised, would that actually cause a certain amount of hurt to our financial gain, for example? Okay, so you ask this question carefully, you consider the loss and gain either to the attacker or to your side. Okay, if the answer is no, it doesn't have any impact, then only you can accept the risk. Okay, if your answer is yes, you will actually the attack will actually cause a certain amount of loss, then you must consider that you must have proper control to protect that asset. Okay, this is where you must consider and whether to actually have proper installation of security, or whether to have insurance, or whether to have certain mitigation action to protect that asset. Okay, you must remember if no three of those actions can actually protect, and if only the loss is acceptable or doesn't actually have certain impact to your organization, then only can you accept that risk. If the loss is too much or too large, then you must try to find the three solution from those three control strategies. You don't simply just accept, although it will actually causes you a big amount of loss. Only if the loss can be absorbed, then only you can accept. So moving further from the previous activity, now you move forward to the identifying proper maintenance and strategies from the risk control that you have selected. So basically, these are the identification of asset and also vulnerability risk worksheet that you have prepared earlier, either from the TIVA worksheet or any other documentation for you to have the proper overview of the asset that you want to protect. And from there, so this is where you decide, okay, these assets needs to be protected. Then you develop the control strategy and plan. Okay, so this can either be installing proper control, having a proper mitigation activity, or perhaps transference control for those assets. After that, you decide to implement the control. After you select one of the three risk control strategies, assess the control, is it adequate or not? Okay, if the control is adequate, which is yes, then you plan for maintenance, which is the improvement of the control that you have already selected or perhaps already implemented. And then you measure the risk to the information asset after you install or perhaps use those control mechanisms. Perhaps, for example, you have selected to install firewall or IDS to protect the asset. So you consider or you try to justify from the installation of that control that you want to use, okay, how much actually you gain from those safety control, for example, and you try to justify if it's not there, what could be the possible losses. And then after that, is the risk acceptable or not? Okay, so let's say after you install those mechanism of firewall and IDS, perhaps the risk can be lessened. So is it yes or no? So if your answer is no, then you need to go back and develop another control strategy and plan. So perhaps not enough just having a firewall or IDS, perhaps you need to add on, or perhaps have insurance and also some sort of backup for your data. Then again, you repeat the activity to implement control, assess the control, is it adequate or not, and then do the proper maintenance all over again. So you must remember, this control must be properly maintained and always reassessed from time to time, because in terms of information asset, those threats also evolve in their method. Okay, so perhaps this year your control is enough, but perhaps after 6 months or perhaps after 3 months, for example, certain threat will come that could jeopardize your asset. Then you always need to reassess your control mechanism and begin the cycle again. Okay, just don't be too comfortable with your available control. It always have room to be improved and perhaps enhanced. So in selecting proper control to actually safeguard your information asset, you must do proper feasibility and cost-benefit analysis. Simply put, from this activity, you try to justify the amount that you want to actually invest in a certain control mechanism with whatever you can gain from safeguarding that asset and installing those security control mechanism. So this is in terms of protecting the asset. What is the asset's worth? What is the worth of the information asset that you want to protect? And compare it to the investment that you want to make in order to install the security mechanism. So for example, perhaps it's not worth it to have perhaps a very high-end or perhaps expensive lock if in that room you just have a very just piece of paper in that room. Okay, and then also the information on that piece of paper is not very worthy of protecting. That is just one simple example. So in terms of identifying how much value you want to invest, remember previously you have given the value to that asset. How much does it worth? Okay, how much is it worth to your organization? So from there you can decide how much mechanism that you can actually pay for to protect those assets. Remember, it must properly be justifiable. You must ensure that the cost to protect is much more lesser than the cost of the asset in the first place. So in order to justify which security control that you can actually invest on, there are two methods. You can either go for quantitative method, which is involved using numbers and try to evaluate whatever security control that you have and try to evaluate whatever option that you have and give it a certain amount in terms of monetary amount, for example, or in terms of manpower amount. So this usually requires a significant amount of data you need to collect and also often takes time. On the other hand, you can also use qualitative method, which is also but perhaps much more faster, which is subjective in nature. So usually you get the opinion from perhaps similar organization, and based from their experience, if let's say you want to invest in this type of security control, okay, what type of asset is suitable for it? So usually for this one, you go to benchmarking activities, benchmarking visit to similar organization to your business operation, or perhaps usually based on your cooperation with other organization. Then only you can do the benchmarking activities and do proper and get proper opinionated and clear justification which of the security control that you want to invest. And this can be completed rather quickly because you don't have to actually do the quantitative analysis, you don't have to do any calculation, but you do your decision, you come to your decision based on other people's experience or based on expert opinion from people on the field. Or you can also choose to do quantitative and also at the same time quantitative, because sometimes organization needs to perform a proper justification for them to actually expense certain amount of money for their security control. So it's not enough just to have quantitative. Sometimes organization also require qualitative input from the expert. Okay, so the activity here is plan the risk management, identify the risk, and before you arrive to the decision which security control to actually choose, you can choose qualitative, quantitative, and plan the proper risk control mechanism. Okay, the most important thing is you decide which is suitable for your organization. So what we need to do first in quantitative risk analysis is to first and foremost gather those data and enter it into the standard formula. What data? Remember that you have done the TIVA worksheet before, where you have identified the asset, threat, and vulnerabilities. So now you need to extend those information whereby you give certain values to the asset with regard to the threat and vulnerabilities that could harm those assets. So the very goal of this quantitative analysis is to first and foremost give value or quantify possible outcome from the risk. Secondly, we want to determine the probabilities of outcome. Means that if let's say this threat or risk could happen, what will be the cost to the organization? Third is to identify high impact risk and develop plan based on the risk. Because after we doing this quantization, of course we will have more value to actually try to validate whatever security control that we want to take after that. So this helps to prioritize the risk and determine the proper control that we can do to protect those assets. So one of the common activities in quantitative analysis is to do the cost-benefit analysis. This is usually to evaluate the economic feasibility with regard to protecting the asset. Why is an asset worth protecting? So for that, we begin the cost-benefit analysis by evaluating the worth of the asset in the first place, and we cross-reference it with the loss in value if the asset they want to protect is in fact compromised. So we see the cost of the asset to the company, its benefit, and then also what will it impact the company if the attack is actually successful. So because it's often difficult to straightforward give value to the information asset with regard to protecting it, so here are the guidelines that you can do to actually give value or certain quantization to the things that you want to have in your security control. So usually, in order to do cost-benefit analysis, these are the factors that you need to consider. Alright, so usually the factors that you need to consider are the cost or perhaps monetary value with regard to safeguarding a information asset. So the first one is the cost of having hardware, software, and services to protect your information asset. Second is the training phase. Of course, it's not enough for you to actually acquire special software, hardware, and services. Sometimes you need to train your personnel in order to use those security control that you want to have. Third is the cost of implementation. This also includes the services and maintenance costs in the long run. Because ideally, for those security control to protect the information asset, it's not just a one-day affair. You need to consider perhaps you will have the security control for at least 6 months, and perhaps if it is successful, you will have it for perhaps a year or perhaps maybe 10 years. So what will be the cost of having it, and what will be the benefit of having that security control to protect those assets? So for the first part, these are the things that you need to consider to give value to the information asset that you want to protect and try to justify with the control that you want to have. On the other side of the equation is of course the benefit of having the security control. So how do you quantify the benefit of having that control? Of course, you need to justify it based on the value of information that you could actually save or protect by having the security control. So this is usually determined by valuing the information asset. Okay, here, the information asset exposed by the vulnerability. Remember, you have the information of the vulnerability. So what would it cost if that vulnerability actually exposed? And then determine how much of that value is at risk and how much risk is there for the asset. If let's say the vulnerability and threat actually causes the risk to happen, what will have an impact to the company in terms of monetary loss? So this is where after this you can actually try to justify this is the cost to have the security control, and this is the benefit that you have by having the security control. Also, in highlighting the benefit of having the security control, it might be a good idea to give a proper asset valuation to the information asset that you want to protect. So this is usually based on characteristics perceived based on the value of the information. And this involves estimation of real and perceived costs associated with, first of all, the design and development of the information asset. Secondly, installation and maintenance of the information asset. And third is the protection, recovery, and defense against loss and litigation. So you must include this also in your benefit analysis and giving it cost and value, so that when you do the cost benefit analysis, it will be very clear. So having this asset there, you will have this cost to bear with, and then these are the initial costs of having the asset in the first place. So asset valuation also involves the following component. First of all, like we have established before, the value of creating and maintaining and replacing the asset. Secondly, is the value from providing the information that we get from the asset, and also the cost of protecting the information, followed by how do we actually value the information asset, and also the value of the IP that we have from the asset. Usually it's not just simply having a proper IP, but what is the income that we get from the IP. And also, it's important for us to understand the value of that asset to our adversaries. If let's say a competing company get hold of that asset, what will the value of that asset to the company? And then of course, in terms of loss of productivity from the loss of asset, and also loss of revenue if that asset is ever compromised. So these are among the components that you can actually pick for evaluating the asset. So in a nutshell, in order to give value to the asset that you want to protect, these are the questions that you need to ask yourself or with your team. First of all, again, how much will it cost to create and acquire the asset in the first place, followed by how much will be the cost to actually recover the asset if you actually lost it, cost of maintenance, and also the worth of the asset to the organization and of course to the competition. So ask this question clearly from the very beginning so that you have a clear picture of what is the value of the asset to your organization before you actually think about the thing that you want to actually have in order to protect that asset. So in order to have a proper cost-benefit analysis, you need to gather and compile also this information before you actually do calculation in order to give justification to what mechanism that you want to have in protecting your information asset. So ask this question like we have covered before, what loss could occur and what is the financial impact from the loss of the asset? Okay, what will be the cost to recover and what is the single loss expectancy for each risk? So the single loss expectancy is when you actually give those value of the asset and multiply it with the exposure factor. If this value is unclear for you right now, I will give the proper example later on by the end of this section. Second information that you need is the annualized loss expectancy. This is the value that perhaps you estimate if, let's say, attack is successful, what will have an impact in terms of monetary to the organization. So how to calculate the ALE is based on the SLE times ARO, which is the annualized rate of occurrence. Again, I will give the example later on for you to get the clearer picture of how to do this calculation. The most important thing that you need to remember why we have a CBA is because we want to justify the cost in implementing certain security control by first of all evaluating our asset and then try to counter it with the security cost that we want to incur if we want to protect this asset. And usually we do the CBA before a control or safeguard is implemented. This is usually when we want to have some budgeting and we want to present the budget to the management. So we want to justify, we want to expend this much money because we want to actually protect this much money in the very first place. The important thing is justify the expenses to protect the information asset. Now, you have to remember why we have a CBA analysis if we want to justify, let's say, prior to having the security control and after having the security control, how much we will actually save in terms of implementing the control that we want to have. So that's why in the formula, first and foremost, we have to have the information prior to control what will be the annual loss expectancy if let's say that risk happen. And then secondly is the ALE post, meaning that after we have the control, how much do we save in terms of safeguarding the asset from the risk. And then the third is the cost of having the control in our organization. So by having the value, okay, we will see later on that organization might feel a bit more justified to having a certain security control that you want to have installed or perhaps buy for the organization to protect the asset. So these are the type of information that you must have before you do the calculation. Don't worry for now if you is still unclear, I will give to you the clear example later on. So first of all, calculate the risk exposure. Okay, what will be the probability of that risk actually happen? And then calculate the loss for single threat occurrences, meaning that if that threat is actually successful, what cost will we incur to the company? Third is the annual rate of occurrences, which is what is the probability that that risk could occur, and then do the annual loss expectancy, meaning if let's say annually, if it's happened, what will be the cost to the company? And then lastly is the safeguard value. meaning the cost to actually have our mechanism installed to prevent the information asset from being compromised. Okay, so the following one we will see how to do this calculation. Now from this sample problem, you will get to know how to actually apply those information in order to get the CVA. So in this problem, you have a problem of a website. So if this website, which has an estimated value of 1 million, and a sabotage or vandalism scenario indicates that 10% of the website would be damaged in such an attack. So the success rate of that sabotage occurs about once every 2 years. Based on the scenario, calculate the following and explain how you derive the final answer. So usually for this question, you have to actually get the value for the ARO, the SLE, the LAE, and you need to present how the amount of money that the company would save per year if they purchase a solution to protect the asset at a cost of RM1000 per year. Can you get the answer? If you want to try it, please pause the video for a moment and try to get this information. Alright. So from this information, okay, first of all, we need to get the ARO. So the ARO is based on the expected failure to occur once every 2 years. So from the statement here, we see that it occurs once every 2 years. Hence, the formula is 1 divided by 2, you will get the 0.5 value. Next, we need to get the SLE. So the SLE we get from the value of the asset multiplied by the exposure factor. So in this statement, the exposure factor is 10%. So 1 million multiplied by 0.10, which is 10%, and you will get RM 100,000. Next, you need to calculate the ALE. So the ALE is the annualized loss expectancy, means that what would the company expect to lose per year. So you need to have the value from the SLE times the ARO. So SLE is here 100,000. The ARO is 0.5. Hence, you will get the value of RM 50,000. Okay, lastly, you need to calculate how much they will actually save if you actually implement the security solution that you buy for a cost of 1,000. So from here, you will have to do the calculation. 50,000, which is the amount that you lost, okay, multiplied by minus the RM 10,000, which is the investment that you make from the security implementation, and then you will get 40,000. So this 40,000 is the amount that you save, okay, if you actually install the security solution that you bought for 10,000. Okay, so if you need to review back how we get this value, okay, please return back to the earlier segment of this calculation and try to understand how we do the calculation. Now, before we continue to the next part, you can take a 5-minute break and perhaps review back what we have learned so far. Perhaps you can look back at the sample problem of the cost-benefit analysis and get the idea of why we need to do the cost-benefit analysis in order to justify your security selection. Okay, after this, we continue to the next part, which is on the qualitative analysis and risk control. Like we have established before, in terms of analysis, qualitative risk analysis is based on the opinion from similar industry or people who are usually involved in the same field. So usually, in qualitative risk analysis, we determine the level of risk based on the probability and impact of the risk based on the opinion or input from similar industry. So this value is gathered by the opinions of experts in terms of probability, impact, and risk level. So for example, probability means that it is a likelihood that a threat could actually happen and causes loss to the information asset, and the impact is the result from those probability happening, and the risk level you determine by actually multiplying the probability and impact. In this diagram, it shows the sample probability scale that you can get from either benchmarking activity or getting opinion from the field expert. Usually, these are the sample of the probability scale that you can get, either low, medium, or high probability. It depends on your organization how you want to actually form your probability scale, but this is just a sample that you can use as a guide. So for example, for low probability, it can be described as there is an unlikely chance that the risk will actually occur. So in this case, threats are not active and vulnerabilities are either not known or have been mitigated previously. And the value, again, based on the expert opinion, you get, in this case, 10%. And then for medium scale, perhaps there is a moderate chance that the risk will occur. It has occurred in the past, but mitigation control have reduced the recent happenings of those risks. So from the expert input, perhaps this is 50%. And for a high probability scale, perhaps the description is there is a very high probability that the risk will occur. It has occurred in the past and will occur again if not mitigated immediately. And the scale in this case given by the expert is 100%. While these are samples of the impact scale, again, the one that you get from getting input from the expert or perhaps during benchmarking visit. So for example, in this sample scale, okay, the low probability impact scale is described as if the risk occur, it will have a very minimal impact on the company. Okay, so usually the risk will not impact critical data or critical system. So the value given here is 10. And then for medium scale, if the risk occur, it means that maybe moderate impact on the company. It may have affect critical data or systems, but not to a large scale extent. So for this one, it's given 50 marks for the impact scale. And for high probability, it means that if the risk occur, it will have a very high impact to the critical data, systems, or substantial losses to the organization if it happens. So based on the probability and impact scale, you will get a proper risk mark. So how do you actually use the impact and probability scale? So in this diagram, you will see how we actually use those values. So for example, based on your benchmarking and getting opinion from similar industry, these are the information that you get. So for example, for DOS attack, the probability value is given as 100, web defacing 50%, loss of data 30%, and loss of website data is 30%. And the impact, again, based on similar industry input, the value is given as 100 impact, which is very high. This one is 90, and then this one is 10, and then for loss of website is also 90. This is based on similar industries that you have visited. Perhaps it's a co-organization that perhaps do similar business that you can actually believe that whatever happened to them can be used to gauge what is the possible route that you can take to have your own security control. So based on that input, how do you use that value? So for example, for DOS attack, 100% occurrence. So you time it by the impact 100, then you will get the 100 mark. And then perhaps for 50% here occurrence, you time it by the impact 90, you will get the 45 value. And then this one, for loss of data, 30%, the impact is 10. So after calculating 0.3 here, 30% times 10, you will get the value 3. While for loss of website data, it is has a high probability of 30%, then you time it with the impact of 90. So 0.3 times 90, you will get 27. So after getting all the value, you rearrange and see which one has the highest value, and the one that is higher in value, you will give it the highest priority. So in this case, the highest priority is 100 here, followed by 45, and then followed by 27, and lastly is the value 3. So you rearrange your priority as priority 1, 2, 3, and 4. This is how you prioritize which asset needs to be actually protected against which threat based on this value. Alright, so after that you will have a clear picture of which one you should prioritize and which one perhaps you can wait for later if you have enough resource later on. Usually, apart from quantitative and qualitative analysis that you perform before you decide if the security control that you want to implement is actually suitable for your organization, it is also good to consider a feasibility studies. So these feasibility studies first and foremost include the organization feasibility analysis. This includes to analyze whether the security control that you want to implement actually contribute to the operation of the organization. For example, whether when you want to install a new security control, does it actually affect the performance of the people in your organization? Does it actually impact positively or negatively? Because sometimes people are very skeptic towards changes or things or new technology that they have to learn in order for you to have the security control that you want to implement. Secondly is operational feasibility, which usually also related to organizational facility. So basically, this addresses the user and management acceptance, whether what you want to implement is supported by the people and also the management. So this also addresses the overall requirement of the people that is important to your organization, whether they agree or whether they support whatever decision that you want to make in order to have the security control that you want to have to protect your asset. That's why the cost benefit analysis and also the qualitative analysis overall must convince your stakeholder that this security control is what your organization needs to protect the information asset. Now, third is the technical feasibility, whether you have the people to actually use or perhaps support when you have the new system installed or the new policy that you have. Who will be the people to actually support the security control in the long run? And then lastly is the political feasibility. This defines what can and cannot occur based on the consensus between the people or the community of interest. Sometimes this also includes your end user, because usually your information asset is related to your user or the people that use them. Okay, sometimes your users are not very uh, inclined to the changes that you want to actually do, or the policy that you want to actually instill to the people is not very receptible to the people that is involved. So this is what you must consider during the feasibility studies. You must consider the organization, the operational, the technical, and lastly, the political feasibility. So if you also do this feasibility study very well and is supported uh, through the quantitative and qualitative analysis, then you can be sure that whatever control that you want to implement to protect your information asset is well supported and will be well received by all the parties involved. Whatever decision that you may come to after you do the risk assessment and do the analysis and also the feasibility study, you must remember the risk control that you chose will always fall into the four categories that we have revealed earlier. Okay, either you pick avoidance method, transference, mitigation, or lastly, acceptance. So avoidance is the security mechanism that you install. Transference is you transfer the risk to other parties. And mitigation is you consider a backup strategy if, let's say, the risk still happen. And if after you consider during the analysis and feasibility, there are also the risk residue that you can accept. Just you make sure that whatever risk that you accept will not cause, or you can actually bear with the cost if the risk still happen. If you have noticed, if you are actually doing risk assessment during the assessing the situation and picking the correct risk control method, this method always follow a somewhat similar approach. It always begins from the asset identification, followed by the threat assessment, and then picking up the correct risk control by having the correct analysis before the risk control is actually chosen. So one of the methods that we will see here is the qualitative and hybrid measure. So this actually combine the quantitative assessment together with the qualitative assessment in order to decide whether the risk control is in fact suitable for the organization. So this hybrid assessment tries to improve upon the ambiguity of qualitative without using an estimation process. Means that, okay, although you have the opinion from the experts or you do the benchmarking, on the other side, you also do the quantitative analysis. So this is where you have the advantage of having enough quantitative information in terms of assessing your asset and also the input from the industry or similar expert in order to get to the very thorough decision before you actually commit to a certain risk control that you want to use. Other method in risk management is also known as the OCTAVE method, or is an acronym for Operational, Critical Threat, Asset, and Vulnerability Evaluation. So this is basically having enough thorough components of a comprehensive, systematic, context-driven, self-directed information security risk evaluation. So this method was actually developed in Carnegie Mellon in 2001 for the United States Department of Defense. So the evaluation include the confidentiality, integrity, and availability of critical information technology asset. So basically, operational and business unit and the IT department work together to actually address and assess the information security needs of the organization. So there are certain variations to the OCTAVE method. The first variation is, of course, was well designed for larger organization about 300 of users in size, while the OCTAVE S is designed for smaller organization which have about 100 users. And lastly, the OCTAVE Allegro was designed to be streamlining the method in assessments and assurance, whereby the approach can be tailor-made for any type of organization or user, either small or big in size. If you need further information regarding the OCTAVE method, you can visit the URL there in the page. So apart from the hybrid method, the OCTAVE method, perhaps you can also take a look at the Microsoft risk management approach. So in Microsoft approach, we have 4 phases in the risk management process. We have the risk assessment task, we have the conducting decision support, meaning that we want to actually, after assessing the risk, we want to decide whether certain risk control are suitable for that information asset they want to protect. Third is the actual implementation of the control that we have selected. And 4 is measuring the program effectiveness. And after that, repeat the cycle all over again. Okay, sounds familiar? Of course, basically all risk management and risk assessment activities follows the same flow. Just sometimes the phase name are a bit different to fit whatever the template that they are using. but basically the core activities is still the same. So if you notice in the assessing risk here, in the Microsoft approach, we have the plan data gathering, which discuss keys to success and preparation guide. Secondly is gather the risk data, which is the information related to the threat and vulnerability of the asset that you want to protect. And then lastly is to prioritize the risk, giving certain priority to certain asset or targeting certain threat or vulnerabilities that you want to address to protect the asset. The second phase is conducting decision support. This is actually where you need to evaluate the existing control and perhaps finding out if you need to actually improve those controls, what are the functional requirements, and what are the possible solutions to identify the new mitigation solution should the other measure fail. And then lastly, to review the solution to evaluate the proposed control against functional requirement. Means that if you want to implement something, what does it affect? Okay, who will be the users impacted by the changes, and either it improve for the better or perhaps that you need to do some adjustment in terms of the workforce or in terms of the software and hardware that is already there that you want to actually improve. Okay, this is also important if you have a legacy system, meaning you have an old hardware. Does your security control actually easy, okay, to change or uh, install in the old machine? So these are consideration that you must consider during the decision support phase. Other activities in this phase also include the estimation of risk reduction. This is where you consider or you re-evaluate whether your new security control is in fact reduce the risk or perhaps nothing will change from the new security control. And you estimate the solution cost and also select the mitigation strategy based on whatever analysis and calculation that you have done. And lastly, after you do the evaluation, this is where you try to implement those control. So this is either you seek holistic approach or in this sense, you do some qualitative analysis which involve the people, the process, and the technology that you want to effect for the mitigation control. And you want to organize by defense in depth, which involve many layers of security in your organization across the business, either the user, the customer, or the infrastructure that will be involving in the change which involve the new security control. Of course, after all is said and done, you need to also measure the program effectiveness. So after you actually implement, you need to always re-evaluate your action and find out whether whatever you estimate or whatever you expect from the security control that you want to implement, does it actually perform well as you might have expected. So this is where you develop the risk scoreboard, understand the risk posture and progress. Either your new security control is in fact improving your risk control mechanism, or is the risk still the same, or does it getting worse? And also the measuring the program effectiveness in evaluating the risk management program for opportunities to improve. This is where you decide whether that mechanism can still be improved, does it work, or perhaps there is no more improvement that you can do, or perhaps the security control after implementation, you found out that perhaps the performance in risk protection is turning out to be performing worse than the existing security control the year before. These are the things that you need to accept and perhaps re-strategize in order to find the proper solution for the next cycle of implementation. So overall, the risk management approach using the Microsoft method, it will involve this phase. So first of all is the risk assessing phase, which involve data gathering, okay, finding out the value of certain asset that you want to protect, what are the threats, what are the vulnerability, followed by the conducting decision support, which involve reviewing the solution that is existing before, and then estimate the risk reduction that you can actually acquire and what is the cost in order to implement the security control. This followed by actually implementing the security control after you have selected it. And then lastly, the measuring of the program effectiveness. This is where you re-evaluate whatever security control after perhaps 90 days or perhaps 6 months or 1 year. So you re-evaluate the performance of the security control that you have selected and then try to assess is there further improvement that can be taken in the next cycle. So of course, this cycle is always continuing in the risk management approach. You cannot just be satisfied with one security control. It needs to always be re-evaluate and reassess to improve the protection of your information asset. Other known method in risk assessment is also known as the FAIR approach. This FAIR approach is of course an acronym of the factor analysis of information risk. Still, the activities are similar, it's just being reworded and perhaps contain certain activity or phases. Okay, although it's being reworded or being reassigned to certain phases, it still contains the same core activities. So, these contain the measurement skills of risk factor. First of all, you have the computational engine for calculating risk, and you have the modeling construct for analyzing the complex risk scenario. Still, it is assessing whatever risk that you might have, and you try to see whatever is the complexity from the evaluated and estimated risk scenario that could happen to your asset. So this FAIR analysis comprises of 10 steps in 4 stages. So the first stage, okay, if you see here, is the identifying scenario components. These identify the asset at risk and identify the threat community under consideration. Again, you see similarity here. First of all, you identify the asset that you want to protect and the related risk and threat that could contribute to the demise or perhaps loss of asset. The second stage is evaluate the loss event frequency. This stage contains the estimation of probable threat, event frequency, estimate the threat capability, estimate the control strength, derive vulnerability, and derive the event frequency. Okay, it's still similar whereby you try to re-evaluate the threat that could happen, what could the threat happening cause or impact the organization, and then what is the cost for the event that is happening, what is the vulnerability, and lastly, what loss will incur to the organization should the threat actually happen. This is the second stage. So this third stage is you evaluate the probable loss magnitude. What actual cost will it incur to the organization in terms of the loss of your asset, and estimate also the probable loss. So you estimate the worst case scenario and you estimate from all those scenarios what will the cost to the organization, either from the loss or either to try to recover the asset when it is in fact being affected from the attack. And then lastly, derive and articulate the risk, where you give the value and you give the proper marking or score based on the scenario that you have already built and tried to estimate. Again, here you are actually trying to derive these are the assets that you want to protect, these are the risks, and these are the costs from the risk that could actually happen. Because at the end of the day, you want to actually find certain security solution to protect the asset against all those scenarios that you have identified. So unlike other risk management scenario, FAIR relies on the qualitative assessment, okay, of many risk components using scales with value ranges, and usually, as always, the qualitative measurement can be derived from the opinion of the experts or do the benchmarking from similar organization that's doing the similar business and having similar information asset. Other notable standard that you can actually look for guidance is the ISO 27005 standard for information security risk management. So basically, you can get the information here in this link, and you can perhaps read it and find the similarities in terms of the core activities that we have covered here. So overall, this document includes 5 methodology for risk management. This include the information security risk assessment, followed by the risk treatment, what you want to do after you identify the risk, and then acceptance of risk, meaning what are the methodology before you actually arrive to the decision to accept the risk, and then risk communication, how do you actually address the situation in risk assessment, and after you do the costing, how do you actually get those information to be communicated to the related people. And then lastly is of course monitoring the risk and reviewing after you selected the proper risk control mitigation method, and then you review it from time to time and improve it in order to have a very secure security control mechanism for your information asset. So again, the core mechanism is the same, but the phases or the acronym and terminology used are somewhat a bit different. But the core activity here is that you identify the asset that you want to protect, identify the risks that involve, and lastly, choose the proper security control mechanism for your security information asset. So overall, this chapter is about you identifying the proper risk control mechanism that you can actually implement to protect your asset. So the activities include the risk control measure that you want to identify, followed by the cost-benefit analysis, which is the quantitative analysis, and then qualitative analysis, which is based on industry opinion or experts, and lastly, the recommended risk control practices that has already been used by the industry. So I hope this chapter has been beneficial to you, and I see you again in the next chapter. Thank you for joining.